Welcome to the Stock Market Daily News Podcast. It's Friday, March 20th, and I'm here to recap Thursday's market action and what's moving Wall Street. Yesterday was another rollercoaster session as volatility stays high and conflict abroad keeps investors on edge. The S&P 500 closed deep in the red, extending its month-long slide. The Dow Jones also retreated, and the Nasdaq snapped lower with losses across tech leaders. But headlines around oil, crypto, and a big NYSE investment in prediction markets mean there's plenty to break down. Coming up, is the bottom near for U.S. stocks? Will energy outperform through the latest round of panic? And what did a billion-dollar bet on prediction markets signal to Wall Street? Let's dive in. First up, the S&P 500 has now fallen for 4 straight weeks and is on pace for its worst month in the past year. Yesterday, it slid to just above 6,300 after brief attempts to rally faded in the afternoon. Technical analysts are eyeing a 9% further drop to about 5,980, the so-called 50% Fibonacci retracement level. That's a key support area traced from last April's market lows to January's record highs. The big takeaway? Markets haven't found a solid floor just yet, and traders should watch for more whipsaws if global jitters keep fueling volatility. Over on Wall Street, research firm Alpine Macro says we haven't even seen peak panic tied to the Iran conflict. They expect more volatility over the next 2 weeks before conditions stabilize. Their playbook for the storm: stay long energy stocks as oil prices climb on supply fears, get ready to scoop up battered global equities once panic peaks, and consider longer-term treasuries if yields keep rising above 4.5%. If you're looking for bargains or a defense strategy, timing in the next couple of weeks will be crucial. Let's turn to crypto, where the major coins all flashed red once again. Bitcoin dropped 3.2% to $68,500 overnight after President Trump extended his Iran ceasefire deadline, only for renewed war headlines to spark another sell-off. Ether and Solana pulled back even harder. But there's an interesting undercurrent. Bitcoin ETFs have pulled in $2.5 billion over the past month, and big institutions are quietly accumulating coins off exchanges. BlackRock's flagship Bitcoin fund is now near the top 2% of all ETFs by inflows for 2026. Despite day-to-day chop, smart money may be setting up for a rebound. A headline you may have missed: the owner of the New York Stock Exchange is making a massive move in prediction markets. Intercontinental Exchange just poured another $600 million into Polymarket, a leading platform for trading on real-world event outcomes. That brings its total commitment close to $2 billion, a strong vote of confidence for event-based speculation becoming mainstream alongside stocks and futures. Rival Kalsher recently raised over $1 billion too. Watch this space as regulatory attention and investor demand for alternative hedges both keep rising. To wrap up, U.S. indexes all closed sharply lower yesterday. The S&P 500 ended around 6,300, the Dow below 39,000, and the Nasdaq near 14,300. Geopolitical risk, rising oil, and technical selling are still driving markets. Today, keep an eye out for inflation data, guidance from Fed officials, and any signs of progress in Middle East talks. That's your daily market rundown. For more updates, don't forget to subscribe and follow the Stock Market Daily News Podcast for smart, succinct market coverage every day.